What up, Tyson?
Hey, Mitch.
Scott, welcome to the call, my friend. How are you?
Yeah, Scott. We
Hey,
got Dan and Hannah.
Yeah. Scott, we're excited to have you on tonight, my friend. I've heard a lot of good things. Dan has nothing but good things to say about you, and I think this fits perfectly with the call we had last week. We've got a student who's working on a great big wholesale deal, and she needs to do a dual close on it. So timing's perfect. We're excited to have you, and the value you have to share tonight, and just be graced with your knowledge. It's awesome.
Well, I'll give it what 30 minutes of the best I have, and let's see where we land.
Perfect. I love it. Would you be open to opening it up to question and answer after your presentation?
Absolutely. Yeah.
Okay.
Happy to be available as needed.
Okay. Perfect. Dan's on the call. Dan, how you doing, my friend?
Good, Mitch. How are you?
So good.
And like you said, we've got our all-star here, Scott, tonight. So he's going to be the man with all the answers.
Well,
I'm looking forward to it.
so I wish I would have spent a little more time on your website, Mitch, but I ordered your book. I'm looking forward to reading that. And,
Thank you.
That's pretty awesome. Got some material out there that I'm always surprised at how giving people are with the material they provide in their books, because it's your life's work, right?
It's interesting. That book was a result of a research project that I did that led me to real estate investing in the first place. I just kind of in a nutshell, I was working a job making 40 grand a year, 27 years old, wanted much more out of life. So I started studying wealthy people and took some mad notes. Just notes eventually turned into a paper turned into a book. I published it on Amazon thinking that, my friends and family would get a kick out of it. And it ended up being a 4 times #1 bestseller on Amazon back in 2015. So that was really what kind of kickstarted my passion to coaching. Was when that took off, it kind of put a bug in me that I got excited about sharing this info with people, and so it's been good.
Well, that's not the typical way that books in our space get handled. Meaning, there's a lot of people buying to try to push it up on the list, but that's organic and that's pretty amazing.
Well, thank you. Yeah, it's been fun. It's been a fun journey. Fun ride so far. Well, guys, it's right on the hour here, so we're going to kick off our call. We've got a few people on, but as usual every week, I think we're going to see a lot more people trickling in, kind of 5 minutes past and 10 minutes past. So we want to try to fit in as much information as we can in the hour that we have with Scott here. So let's go ahead and just kind of start rolling. So today we have a guest speaker. I'm going to let Dan actually do the honor of introducing him. This is one of Dan's contacts, and we can thank Dan today for having Scott on the line, because he's the one who set all this up. Now, last week we went into some detail about some wholesaling, particularly a deal that Sherry has. I'm really hoping that Sherry's going to jump on the call here tonight, because I think with what she shared, I mean, this is a wholesale deal that she shared with us, a land deal. That she has an opportunity to make a $300,000 wholesale fee on. She obviously doesn't want the seller, knowing that. So dual close is going to work perfectly here. And I think transactional funding is exactly what she needs. So without further ado, Dan, I'm going to go ahead and turn it over to you if you want to introduce our speaker for the night, and then we'll let you guys run with it.
All right. Sounds good. And on that fact, did you end up talking to Sherry this week, Scott? Do you recall?
I did. I spoke to Sherry maybe 20 minutes, and yeah, I mean, I'll answer whatever questions you want. I don't want to overrun the conversation.
Right. No problem. So good. No, so for everyone on the call, it looks like Sherry's logging in right now. ultimately, I just want to introduce Scott. I've worked with Scott probably for the last 3.5 years. I know a little background on him. You know, he might be telling us more as he starts in here, but I think after what he calls the mortgage meltdown in 2008, he ultimately became a mortgage broker, and he started learning a lot of different tricks of the trade. And in the long run, from information I've got from the past, I know that he helped interacting with individuals and wholesaled over 3,000 homes to real estate investors in a 3-year period. And what I know about him is he really is extremely good with numbers. He's extremely good with looking at creative ways to make things work. But he's also morally on top of things. I had a student, and I told this to one of our students recently, but I had a student probably a year and a half, 2 years ago, and she was jumping into her first wholesale deal, and she was actually tied into one of Scott's sub people that worked for him. But when she got into the deal, she was ready to go and do a fix and flip. Scott personally called her up, talked to her about it, and said, look, I'm more than happy to fund you this. The numbers do work, but I really think this is kind of a tricky fix and flip from the get-go. And so I'm more than happy to fund you on it, but I'm just kind of letting you know, you might consider wholesaling this off and then looking for another one with these parameters in it. She ended up taking his advice. In hindsight, she was really grateful for his advice because it was exactly what he had stated. And from then on, she ended up doing extremely well, doing fix and flip after fix and flip. Her husband ended up quitting his job, and they started doing fix and flips full time. And so I can't say enough about Scott and his moral side, as well as his expertise in numbers. You know, he doesn't remember it from all the people he's been nice to, but at one point we were at an event in Las Vegas, and he not only took out his whole company, but he took me and my wife out to dinner, and we had a wonderful dinner, and you know, he fit the bill. And so without further ado, Scott Brown from USA Private Money.
Thank you, Dan. That's very kind. Appreciate you. Yeah, we've had to me, it's all about relationships in this business, and because we never know when we're going to need to cross that bridge again. And it's just, you know, good to treat people as best you can. So do I have the ability to share my screen here? Let's try it.
You do. Yeah, we made you a co-host, so it should
right.
just be that share screen button.
All right. Let's go ahead, and I'm gonna get this to pop up here, and we're going to be cooking with gas. So, all right, guys. So, as you heard, my name is Scott Brown, and so I'm going to tell you a little bit about my background, things that we've been up to, and kind of what led me down this path. And what I want you to get from this more than anything is that I'm just a simple guy who wouldn't give up. And looks like I moved my, hang on, can you see my screen or not?
Yes, we can see
okay.
it.
I'm going to keep it going the way it is. I moved it and I don't see my big screen there, but all right, there we are. So I'm just a simple guy that grew up in North Carolina with all the odds in the world stacked against me, but just as one guy said, I was just too dumb to quit. And so I'm going to jump into it. So the goal is maybe this will go 20, 25 minutes of just background info. And then from there, just open it up for questions and try to see what value we can add. So as I go through this, you're going to see slides and different things here. So I've got my contact info on this slide as well as on the, let me move this. If I'm sharing my screen, you're probably seeing All right. Get this over here. All right. That should be better. So anyway, this is so you can take a screenshot or take a picture or whatever, but that's my direct cell phone. For years, I didn't give that out because of some of the environments we worked in, but in these little small groups, I don't mind it because we're, lots of things have changed and with COVID and so on and so forth, but there's my direct info and our office line and my email. And then at the end, I'll have this again. So we'll have a slide up for this that'll just remain up while we're doing questions. So, see if we can jump in here and get going. So, so USA Private Money, just so that you know, in the industry, there's a lot of people that set themselves up as brokers in this industry, and it's pretty easy because there's an exemption for non-owner occupied investment properties. And so you really don't have to have any licensing or any real experience to to do it. So all that said is just know that we are an Arizona commercial and residential mortgage broker, and there's our licensing number. We're licensed, bonded, and insured. And, for what it's worth, Arizona is one of the most difficult states in the nation to get the broker license in. And there's just tons of requirements. And so, Dan, so that I'm clear, are you seeing my laptop with my slides the way they are, or are you seeing just the one slide that I have up?
I see it's filled up the whole screen, but I do see on the side where it has little icons there, but that's
okay.
Yeah.
All right. So we should be good then. Just wanted to make sure that you're seeing the things, not all the slides at the bottom, but
yeah.
Anyway.
No, I'm not seeing the slides at the bottom. It's all good.
All right, excellent. So I live in Mesa, Arizona, and been married for 20 years to my wife, Natalie. We have 3 daughters, and I've been in real estate investing, mortgage brokering, and direct lending since 1998. So 22 years. So the first decade that I was in lending, I was actually a mortgage broker in Draper, Utah. And anyway, decided I liked warmer weather, so we moved to Arizona. But the truth of it is my first $1 million ever came from wholesaling cheap homes. And that's an amazing story. I'd love to share it sometime, but it takes a little bit of time to share that story and to really give it its, the detail it deserves. But I was able to wholesale about 3,000 cheap homes. And that changed my whole life. And you're like, 3,000? I know, it surprised me too. But when things start working, sometimes they work really, really well. And that was one of those opportunities. And frankly, had I not done that, USA Private Money would not exist. And the reason is because I got constant questions about how do we fund these low price deals? And with my prior decade experience in lending, lenders just don't like funding deals under 50K. In general, it's a lot of work. There's not a lot of money. They're limited on what they can be paid. And so it's just a hassle. So that's where USA Private Money was born. And then my second million came from equity in real estate deals. And it sounds like super impressive and everything, but I'm going to tell you, sometimes some of the craziest things that happen to you can be like pretty amazing if you'll just stick with it. And so what ended up happening there is that I took my profits and I had pre-purchased a bunch of inventory, and I was sitting on inventory, and some of the investors that were buying from me slowed down. And so I had inventory that I went and I took them from these $10,000 to $15,000 homes to these, $25,000 to $35,000 seller finance deals. And so it doesn't take too many of those before you've got $1 million in equity there. And that's exactly what happened. And I, ended up selling off a lot of those notes, and I call that flipping capital. And there's a whole nother discussion we could have about that as well. But, and then what ended up happening was my third million came from, there was such a demand for brokering mortgages and lending and helping people get things structured. And you know, if it sounds like I'm bragging or whatever, I'm not trying to impress you. I'm trying to impress upon you that if you have the desire to work at something and you'll just get the right mentors and you'll work at it, anybody can have success at this. And so in the last 5 years, since 2015, we funded about 200 million in loans. It's not a ton of business. I mean, it sounds like a lot, but it was, you know, maybe 15 loans a month. And so we're kind of a boutique private money lending company, but we focus on students who just don't get the right help out there. And what I mean by that is you'll call up a hard money lender and, you know, basically what they'll tell you is go get the deal under contract, call me back. And I would just tell you that if you do that and you don't get proper education before you do it, you've got your earnest money at risk as well as your reputation. And I could just tell you that there's been many, many people that have called us and say that they're under contract and they need to close. And we start analyzing the deal and it's just not a deal. I mean, the numbers just don't work. And so we can save you a bunch of grief, stress, and heartache. And, you know, at the end of the day, we don't win unless you win. And so our goal is to help you win so that we win. And so as you saw at the bottom, there was a lot of hard lessons that we had to learn through this process because there was no hard money lending automated underwriting process. We had to create it all. And so I say to people, I've seen the future. And, you know, when I say that to people, they're like, oh no, here we go. We've got some dude that thinks he's clairvoyant or whatever. And next thing you know, you're going to want to mistreat me. So, but I've seen the future in a different way. And I just like to, you know, have you have an open mind and see if we can add a little humor to this as we go here. And so I want to share a little joke with you. So there's these two priests that are on the side of the road and they're holding this sign that says the end is near. And you see the car, it's pulling out of the lane and they're trying to stop it and say, don't go over the bridge, the end is near. And they're telling, you know, it's like he's trying to get him to stop. And he's like, you know how we do. We just ignore people that we think that maybe are zealots or a little fanatical or whatever you want to call it. We just like, okay, I'm going to get out of this situation, especially with what's going on in COVID right now. So all that said, you know, a moment later, you hear this big crash. And the one priest says to the other priest is, you know, what are we going to do here? We've got to find a way to stop this. And our message just isn't getting out to them. And so what they did is they put the sign down, wrote on the back of it, and they changed the message. And the message said, the bridge is out. So what I'm telling you is that there is a message here that if you'll listen, you might be hearing from everybody that the end is near from the standpoint that, oh yeah, we can pre-approve you, we can do that, we can do this. And at the end of the day, what's happening is that if you don't do it the right way, the bridge is out and you regret it. And so you have a bad experience. And so what our goal is to help you to have a super positive experience with lending. You know, I'd much rather tell you that it's a bad deal than have you get all the way into it and have a situation that, you know, gets you out of the business. And so we don't want you out of the business. We want you, you know, there's lots of good that real estate investors do for the community and society in general and for their families. And so we're a big advocate of helping you guys navigate this process and make sure that you don't run into one of these bridge is out moments. All right, so I'm going to jump in real quick to kind of my background and just so you can get a feel for who I am. And the goal is to inspire you. Again, it's not to impress you, it's just to impress upon you that you can do this. And there's a lot of opportunity. And so if you'll just stay focused, you've got a bright future here. And so I was born in a rural area of Mooresville, North Carolina. And today, this area is called Ray City, USA. and it's home to 60 plus NASCAR teams. And, you know, those that are NASCAR fans, you'll recognize the name Dale Earnhardt Jr. and his father as well. But they were, you know, some of the most popular drivers. And they happened to own about 200 acres a couple miles from where my grandfather had his home and his land. And so, and so there's an interesting story about my grandfather. So he was born in 1916, and the Great Depression hit in 1929 through 1933. And then, so grandfather became a bootlegger before he was 20, and he was hauling moonshine in the backwoods of North Carolina. And so what he would do is he'd soup up his car and he'd outrun law enforcement to make deliveries. Well, so this way of thinking and living became a pattern for his 4 children. And if you didn't know that how NASCAR got started, it was basically that all these bootleggers were trying to outrun law enforcement. It's a great story, and I'd tell you to go read up on it. You'd be, you know, if you're not from that area, you're like, this is absolutely crazy. It is crazy, but that was, you know, the area I grew up in. But there's the other side of it. You know, I was born into a family that made a lot of poor decisions, and I was born into poverty. So I had to decide at an early age if I was going to be the victim or I was going to be victorious at this. And so, you know, what comes from this is that I had parents with horrible addictions to alcohol. And, you know, after all, it was the family business, and alcohol overtook their lives. And, you know, my mom was pregnant at 16, had her first child at 17, and then had 5 kids by the age of 23. I mean, you know, that's something else. And then my dad was in and out of jail. And at the age of 5, my parents split up, and my mom had no way to support us. And so luckily, and, you know, as I've gotten older, I would say now by the grace of God that we were able to move in with a family from a church that my parents and aunt were affiliated with. And, you know, and so I lived with them for like 10 years, and teenage years, that was difficult. I mean, you know, can you imagine all that crazy thinking, and, you know, people don't want you, and going from house to house and just trying to find your way. And so there was some difficult times, but what I learned through this whole process is that, you know, you might be born into poverty, but staying broke is a choice. And you become like those that you associate with and what you focus on in life. And so if you haven't kind of gotten where you want to be, I would tell you to consider maybe changing who you associate with and what you focus on. And one of the great ways to do that is to have a mentor. And for me, one of the first mentors that I had was, and he didn't even know it, was Earl Nightingale. And he put out a cassette series called The Strangest Secret. And the reason I was following him is because he retired at the age of 35. And I was like, man, I want somebody that can show me how to get it done. You know, I don't want a job. I want to figure out how to get this done. And so this right here was something that really impacted me. He had a statement in there and says, out of 100 men age 25, what will happen to these men by the time they're 65? 1 will be rich, 1 will be financially independent, 5 will still be working, and 54 will be broke. And, you know, the rest, well, they've passed on. So why is this? Well, there was 2 reasons. And the reason number 1 is because we become what we think about. They have no goals, they have no vision, they have no focus or purpose. And so we know the cliche scripture that says, you know, those without vision perish. And so that's what happens. And then the second thing is that most people are happy to have a job that provides a living wage. Now, all that said is that caught my attention. What is a living wage? And so I started doing some research, and this was many, many years ago that I did this research. And so what happens is we trade 40 hours a week for 40 years of our life. And then, you know, we get an education or whatever it is that we do, and we end up with a living wage here. And so I want you to look at this chart and the state that you're in, and look at what the living wage is. And so that's what the average person earns across America as a living wage. Now, what does a living wage get you? It gets you food, housing, and clothing. You notice it doesn't get you retirement. It doesn't get you vacations. It doesn't get you lifestyle. And I was looking through Mitch's book, and I love his first chapter where he says, change your mindset, get out of the employee trap. I love that. It fits right in with the same kind of, thought pattern I have, is that, so none of us would get on an airplane if they told us that it would get us 90% of the way to our destination. Yet we work a job our whole life and it's only going to get us 80 to 90% of the way. Why is that? It's because we don't have the proper training and we don't have mentors in our life that are helping us get that extra 10 to 20% there. And so I applaud guys like Mitch who really put it out there and try to help people accomplish this last part. It's, nobody cares about who's second on a race. You always learn, who won the race. That's what we ask. Well, so the goal is for you to win the race. You've got to get it done and you got to finish that last 10 to 20, percent of it. And so you've got to have a way to do it. And so this is the commentary for most Americans. I started out with nothing and I still got most of it left. And, and that's just how it is. And so if we don't want to be that way, then we've got to change some things. All right. So here's where things changed for me. At the age of 26, I purchased my first house. And, I was so excited. At that time, I was not in mortgages. I had started a staffing company in Salt Lake City, and I started it, brought in 2 other partners. And anyway, so I was qualifying for my first mortgage. And when I went to the bank, I got an interest rate of about 6%. The loan amount was about $140. The first payment, or the mortgage payment, was about $839, and the interest payment was $696. And when I looked at the statement after I made that first payment, the second statement came, and this is a true story. I couldn't believe it. 80% of my payment went to interest, and I was stunned. And so I called the lender. I said, there's got to be a mistake. I got 6% interest, and I didn't get credited properly on my statement. And the lady says, well, what do you think it should be? And I was like, well, simple math says 94% of the payment should have went to the principal reduction and 6% of it should have went to interest. And she started laughing and she says, sir, what you have is a 30-year amortizing loan. And I said, what you have is a really good business and I'm going to find a way to get into it. And so what I've decided right then and there, that being the bank was the best seat in the house. And so that is what caused me to say, I want to go into lending. If that was legal and they could do this to people, then I wanted to get in on it. And so what you have here is, for the last 2 decades and 4,500 transactions later, and, in the book Tipping Point, it talks about having 10,000 hours makes you an expert. And so I've got about 44,000 hours of, is equated in years of doing this. But my education doesn't stop, just like yours doesn't. I've been to hundreds of seminars, events, webinars, and I buy books. Anytime I hear an idea from somebody, I buy their book. I mean, I think what people give away in a book is astounding for $20. And so I buy the books. And so I just bought Mitch's book, Mindset to Millionaire. And I love this little quote from Mark Twain. He says, the way to learn the task is to do the task. And so, you've got to take action. You can't just sit there and have some shelf help or some webinar help or some seminar help. You've got to take action. You got to go put these things into action. And yeah, you're going to, sometimes it doesn't go exactly the way you want, but that's why you have mentors. And so this has become my life's work, is this industry. I love it. And I think it's the fastest way that someone can secure their financial future is through real estate, in my opinion. I mean, unless you have a business that's going really well, or you're a top executive of a company, real estate, in my opinion, is one of the best ways to get there. All right. So over the last 5 years, you may recognize some of these celebrities, and on HGTV, I didn't get the quite graphically the right pictures here, but anyway, you get the idea. Is that so? What would happen is that these celebrities would come into an event, and people would pay $25,000 to $100,000 to be trained and coached and taught the business. And in the beginning, I was like, wow, I can't believe, you know, people pay that. But the more and more I was in this industry, my mindset changed. And the reason is that to pay $25,000 to get the shortcut and don't have to make all the mistakes, because I can tell you I've made a lot more mistakes that have cost me more than $25,000. And if I'm being really honest with you, I've made mistakes that have cost me more than $100,000, you know, over the 22 years of experience. And so a mentor is the shortcut. And so I got to where I just really enjoyed having that opportunity. And we took about 7,000 calls a year where we pre-approved people for funding and helped them secure their flipping capital. And what I would just tell you is that, again, remember, this industry is not regulated. Most people do not have a license. If the first question you ask somebody is, do you have a loan officer's license or a broker's license? You could eliminate that person that quick. Are there good people that don't have it? Yes, there are. But the license that I'm required to have, because Arizona just happens to be one of the only states in the nation that requires it. And, you know, we have to have, you know, 3 of the last 5 years of being in this business. You have to have net worth. You have to pass a criminal background. You have to pass credit. I mean, these are all normal things that you would expect of somebody that's collecting all your financial information and, you know, and charging you fees. And that's the big kicker in this industry is that on the conforming side, it's regulated. You can't change somebody's interest rate the day of closing and say, oh, well, the lender, you know, they switched it up. You can't do that on the conforming or a paper side. But you know what? On hard money and on, you know, private money and, you know, all these different spaces for non-owner occupied lending, you can. And so you have no way of knowing that you're going to get what you've been promised when you go to close that deal. And so with me, I have a license to lose. So anyway, so I share those things just to educate you and help you understand that there's a better way to do it. And so the solution is to find a mentor. And I don't know much about Mitch, but I know Dan real well. And I would just tell you that I know that the fastest path to success is that you've got to take action, you've got to have a mentor, and that fortune favors the bold. And that was a line I picked up from Bohemian Rhapsody. I love that, how Eddie Mercury, if you recall that scene where he was trying to cut a deal with the record label and the guy was like, you'll never do it. And he walked out of there and threw a rock through the guy's window and said, fortune favors the bold, I will do it. And he went on to do some amazing things in his chosen profession. So talking about loans that we offer, and I want to jump into this, and this is a pretty quick thing, but I want to leave most of the time for Q&A. But the thing that you need to understand is that in the world, if you were going to buy a primary residence for your family, the first question the real estate agent asks you is, are you pre-approved? But somehow in the world of investing or fix and flips and, you know, assignments and wholesales and whatever, we bypass this step. And it's such a critical step. And so there's some simple things that we can do, like on our webpage. We have a calculator. If you go to usaprivatemoney.com/FF, and, you know, in there you can put in your deal. You can analyze it real quick. It'll tell you if there's enough projected profit. And And if it is, and you meet the credit requirements, and we're going to talk about that in a moment, but if you meet those two things, then you're first level pre-approved. Then there's some supporting documents that we've got to go through. And again, there's no automated system out there. We had to create this from scratch. And so we created a checklist, and we made it where we send you out a secure place for you to upload your documents. And we take you through a complete pre-approval process so that you're, loan ready, mortgage ready, credit ready. There's all these things you need to be ready for so that you don't lose your earnest money and your integrity and your relationships in this business. All right, so talk a little bit about the fix and flip loans. And so I'm going to keep this super simple for you. There's two loans that I'm going to tell you that we do the most of. I call it fast money and smart money. And on the fast money, if you need to close in 3 to 4 days at 70 to 75% of the buy price or acquisition price, and you can't wait for someone to do an appraisal, we can do a BPO that's $200 that you pay for. And then on a case-by-case basis, we can help with what we call rehab reimbursement. And on rehab reimbursement, essentially what that is that if you've got, I don't know, call it 40,000 of rehab, you'll pay the first 25% out of pocket, meaning 10,000 out of pocket. You complete the rehab. Once you complete the rehab, we can work with you to reimburse you that 10,000, and then you do it over and over. And I have a secret to tell you. All the lenders out there that are telling you that they offer 100% rehab, that's exactly what they do. So don't be fooled by all that. So you have to have that first $10,000 no matter who you go through. And unless you've got a private money source that's going to fund your 100% of the buy price and 100% of the rehab, it's a friend or family member or somebody that trusts you. That's how they do it. All right. And so interest rate, it's typically 1% per month. So if you can be in and out of a deal in 3 months, 4 months, 5 months, I'm just going to tell you the first time flippers that we worked with, and we helped hundreds of them do their first time flip. First time flippers are somewhere between 6 and 8 months. And so to get this capital that moves this fast, it's 3 to 4 points to do the deal. And you may say, well, that sounds expensive. Well, you get to decide, is 3 to 4 points expensive or losing the opportunity to make $25,000 to $50,000? I mean, it comes down to what works for you, but we're here to support you on whatever you decide there. And the other thing we can do is, and Dan, this is an update, but we can do rural properties. For such a long time, we couldn't deal with rural properties. Yes, we're going to offer less on the rural, and we can go down to loan amounts down to say $25,000, and we can deal with low credit score, and we can deal with no experience. And so what we try to do is create a product here that we can remove all these obstacles that you hear a no from when you call most other lenders. And, if you call a lender and you say, what's your minimum loan amount? Most of them won't do anything below 100,000. It's just, there's not enough money in the deal. They don't want to waste their time doing it. I mean, and that's just the blunt truth. All right. So then there's smart money. Smart money can close in 25 to 30 days. It's the way the industry promotes this is they say it's 80% of the buy price and 100% of the rehab. But they don't tell you it's reimbursement. And there's lots of documents. And you got to have a 680 credit score. Well, guess what? We're a correspondent lender. We can do those all day long. Those are easy for us to do. But the challenge you've got right now in this market is appraisals are taking about 2 weeks in many markets just because of the refi boom that's going on in the traditional lending markets, owner occupied. And so the appraisers are busy and they just don't have the time to get to you. So if you don't have, 30 days to wait, then you can look at this product where we literally can close 1 day from the time that we have your title report. So what I would tell you is that, you have options, and you know what? The difference on pricing is not that much difference. On the smart money, if it's your first flip, you're going to pay 1% a month, and you're going to pay typically 3% on your first deal. After you've done 3 or 4, well, that'll get down, maybe down to 2%, but it doesn't go down much lower than that. So, just know that's how that works. got a couple testimonials for you to maybe expand your mind. This is a doctor, anesthesiologist that lives in Utah County in Salt Lake area. And anyway, he did 15 joint venture flips in about 18 months. And his profit was over 300 grand. And so what do you mean joint venture flips? Well, it's really another discussion, but the high level on this was he's busy. He's an anesthesiologist. He's has a practice. He works, 8 to 12 hours a day, depending on the day. But he had capital. So he got pre-approved with us, and he went out and he found flippers in the area where he lived that were doing fix and flips. And he said, look, I'll provide 100% of the capital. I'll provide, even though these lenders want 20% down, he's like, I'll get pre-approved. I'll put the 20% down, and then we'll split the profit. And he just made sure that each deal had an average of $40,000 of profit, and he got the first 20,000, which was a slick way. We had to work with him a little bit to get that, because the first deal, he only got like 10 grand. So we redid the paperwork, and we said, no, he gets the first 20 because he's taking all the risk. And anyway, he went on to do 15 of these in his first year. And so that's just an idea that, you could consider. This is a couple that I love this couple story. And the reason is that when you talk to them on the phone, you can barely understand them. They don't speak English real clear. They're immigrants from the Ukraine. And in their first year, they funded 13 loans in Illinois. And so the minimum on our calculator that we want to see when you're doing a flip is 25,000. And so they did 13 of those. And so that's 325,000. I believe it was more than that. I believe they were about a little more than 400,000. And you say, well, why do you say the minimum has to be 25,000? Well, the reason is that the investors want to see that you have enough to lose in the deal, so you're not going to walk away from the deal. So if you're only making 10 to 15,000, I had a lady tell me one time, 10 to 15,000 might not be much to you, but it's a lot of money to me. I get it. And I don't think any of us on the call would turn down $10 to $15,000 on a deal. The tricky part, though, is that the investors that we sell our paper to, they want to see that you're going to make a profit, because they're not in the business to own the real estate. They're in the business to loan the money. So you got to understand that there's some things that we're trying to protect you from. So, you don't want to do a deal. And, in the seminar world, they say you get paid two ways: education, meaning experience. You get out there, you do the deal, you get experience. And the other way you get paid is by, getting money. Well, I think all of you want to get the money part. You don't want just the experience. I talked to a guy the other day, and he told me, his first deal he lost money on. And, why? Well, he didn't have a mentor. He just went out and he started trying to do it. And and so I'm in the middle of analyzing his deal with him, and I showed him, I compared the comps with him, and I said, the comps you're giving me, you're going to break even on this deal. And he's like, that's not how the numbers. I said, look, I'm telling you, we've done hundreds and hundreds of these. You have to trust the process. You can't fight me on this. If the calculator says this, take the emotion out of it and pay attention to the calculator. So unless there's some unicorn of a deal, then you've got to trust the process, and you got to trust the calculator. So anyway, there's a couple of testimonials for you. And so there's three ways that people typically work with us. And so what's happened here is, in the pandemic, it used to be that you needed a 620 credit score. They've raised it. All of the lenders froze. They took their score from 620 to 680. So how do we combat that? So instead of you saying, I'm out, I can't do it. So what we do is we work with you to get you pre-approved. We work with you to get credit ready and to get loan ready. And so there's an expense for us to do that. And you'll see that there's an option that costs nothing. And so we don't make a bunch of money on this $349 down and $97 a month. And what that's basically to do is to pay someone to go in and help you boost your credit score and collect all your documents. I mean, we're basically processing a file up front, hoping that you're going to close a deal. And for years, we've done a one-time fee of $997. And listen, I'm not here trying to sell you on this. I'm trying to be a resource to you. If you see the value and you want our help, reach out. I can promise you nobody will chase you on this. It's just not what we do. And then the third way is that you just call us when you have a deal, meaning if you've got enough time and you don't have a gun to your head to close the deal, you don't need to do option 1 or 2. I mean, I already told you that on our fast funding, we don't care what your credit score is. We don't care if you have experience. We don't care if it's rural, but we are going to analyze the deal and make sure the profit's there. And if we're going to look at the comps with you, we're going to make sure that the numbers work. And so those are some ways that you can work with us, and a super soft sell. And so as we close here, I just say to you that it's no joke. The bridge is out. If you do it the wrong way, you wreck and crash, but you don't have to. You could just stop right here and say, go to the expert, let us analyze the deal, let us help you. And so that's kind of what we're looking for, is to be a support and a resource to you guys. And so I want to thank you for letting me share a few thoughts with you today. And I'd like to open it up for questions and just see if I can add any value to you guys. So Dan, Mitch, what questions do you guys have? And let's see if we can help.
Well, first off, Scott, thank you so much. That was amazing and lined up exactly with what we've been talking about. I am going to ask you to leave up that contact information, because
right.
I would like each one of the students on this call to be able to reach out to you and get a chance to work with you. I'd love to open it up for questions. So any questions you guys have for Scott, while you're thinking of your question, write it down, because if we're not getting questions, we're just going to call it. But I would like, Sherry, I'm going to ask you to kind of share a little bit about what you're doing on your deal, and let's get a feel for what Scott thinks about it. I know you guys already talked, but I think for the benefit of everybody else, let's kind of go through what this looks like.
Okay, sure. So we're a little bit closer. The end buyer is doing a lot of upfront due diligence, which is fine with me, because I don't want to, have him backing out halfway through the deal. But where we're at is, Scott explained a little bit to me how the transactional funding would work. And I think it'll work pretty good for this deal. So we'll have a double closing that happens when the buyer sends us his money. Scott's gonna wire his funds over, and within hours or within a day or so, all the money's gonna switch hands. And I don't know what questions you have for me or what you want me to explain further. Scott can probably explain it better than I can.
Yeah, I don't want to take over. If you've got a question for me, let me know and I'll answer.
So Scott, I am curious on a transactional funding situation, especially a dual close that's going to happen in the same sitting. Do you actually wire the money in? I mean, does it actually have to touch the trust account and then come back?
It does. And so there's a couple different ways. I mean, depending on state laws and title people that you're working with. And so I'm going to tell you the process. It's a super simple process. And after explaining this for years and years to students, we got it so simple that I think you guys will get this. So what you're doing is that you're getting that deal under contract. And once you get it under contract, you're simply having the buyer, whatever price you're selling it to them above your price that you're buying it for, you're just having them wire the money to title, meaning you have an agreement with them, you open escrow, they wire the funds in. Once they wire the funds in, and we can get proof that the funds are there, then yes, we have to turn around and wire funds in for the purchase amount. And so the difference between the purchase amount and the closing cost is profit to your student.
Okay.
So the difference between their contracted price and their sales price is profit. It's that simple.
Right. Plus whatever fees and obviously closing costs and whatnot. But yeah, that makes sense. Okay. Now, kind of in that same vein, let's say, for example, you did this on a fix and flip for somebody that wanted to wholesale it, but the end buyer was an investor and needed a hard money loan. I know in a lot of states, an assumable loan falls in line with that dual close rule. I know Texas is one of the states. Utah is really tightening up on assignment, so dual close is becoming more and more popular. Do you do assignable hard money loans, obviously with approval of the end user?
Yeah, I
When you
mean,
approve the end user.
as long as it will fly with the title company, meaning if we're bringing capital to the table, as long as we can have a title policy, we can work from our side, we can work around it as long as it fits our box, meaning our LTV guidelines and those kind of things. Yes.
Okay. Very cool. Well, I've got a personal question for you, and then we've got some questions that are popping up here in the chat that I'll read off to you. You mentioned that you live in Draper. That's where I was born and raised. What part of Draper did you live in?
Oh, yeah. So we were just in a little area called Cranberry Hill, right there by like 114th South and 3rd or 4th East there.
Yep. I went to Crescent View Middle School, so right across the street.
Yeah. There you go.
That's awesome.
We bought a foreclosure and fixed that up and lived in it for 3 years and then moved to Arizona.
Very cool. That's awesome. That's a cool connection. So we've got a few students here who have typed in some questions. You guys are welcome to come off mute as well, but we've got 3 questions here. So Kathy was asking regarding approval. You mentioned credit score, experience, etc. But what about my current income? And then as a follow-up, she asked, do you lend in Texas or North Carolina?
So yes, in both of those states. And as far as income, so on non-owner occupied investment property, you'll find it interesting. There is not a debt to income ratio component, which confuses people. So it has very little to do with your income. And I'm going to give it one asterisk, and I don't want to, and so maybe, that we could come back and talk about a different loan product, but there is a product out there that will fund 100% of your buy price and 100% of your rehab. And literally you're coming in with nothing down. I mean, but I want to give that a bunch of asterisks. It's not easy to get that loan approved. You're going to work for it, and they're going to do that. It's the only loan where they're going to look at your current income. But all of the other loans, what they look at is what's called reserves. And so when we go through the calculator, what we're looking for is that you have 6 months payment reserves to make the monthly payment while you're flipping the home. And we're looking for that you have 10% contingency, in case you go over on the rehab budget. So that's what they look for instead of what you make at a job.
Okay.
Hey, Scott, I wanted to interject there. So on most of the loans, when a student's doing a fix and flip, are they paying a monthly fee back to you as the lender? Or on some loans, do they hold off, all that money is accrued, and once they sell the property, say 6 months, that's when they pay the lump sum back to you?
So you bring up a really good point, and this is not something we're, really announced and going live with, but I'll just tell you what's coming. The quick answer is people, so look at us as we're a correspondent lender, and all that means is that we buy our money at a lower rate and then, package the deals up and then we sell them off and we make a spread. I mean, it's done in every, business. There's costs and then there's margin and, whatever. And so what typically happens is if the interest rate's 1% a month and it's $100,000, you owe $1,000 a month. So you've got to have $6,000 in reserves. And yes, you're making that monthly payment. However, I am in the process of creating a Reg A fund, and I'm about a month and a half into this. And what a Reg A fund is it's basically going to be our, you know, we're going to call all the shots on funding deals and what we would do. And so, and I don't have a issue per se. I mean, obviously there's guidelines we'd look at on each deal, but I think the market's underserved. And if it's a really good deal, the net effect of a really good deal is if we're funding 70% of the buy price and then helping someone with rehab reimbursement, truly where they are in that deal is they're somewhere between 60 to 70% of the ARV. So there's a bunch of equity sitting in that deal. And so when we launch the fund, we are absolutely going to have the deferred interest accumulation option. And you know, we're going to be excited to bring that out, but it's probably January, February before we go live with that.
Very cool.
Great,
I'm seeing a bunch of questions pop up about where you'll lend. So instead of going state by state, is there a handful of states you don't lend in? Do you lend in all 50 states?
Yeah, so I'm going to give you the quick answer, and then you know, I can give you a little bit of detail that you need to be aware of. But so the quick answer is that not Oregon, not Utah, and not Nevada. And you're like, well, why not? It's because of their rigorous lending requirements for licensing and physical locations. So I don't have a physical location in those areas. And so we did a couple loans in Oregon and got fined $15,000 doing it. So it was a mess. They just, you know, it's just not worth it. So it wasn't like we were intentionally trying to do it, but, you know, so those are the kinds of limitations that we have. But in general, most states we will, we can help you in. And if you call me and there's a deal in one of those areas, I'll be more than happy to direct you to someone that can help you with the deal.
Perfect. Okay. Charlotte Road asked, how much did the doctor invest overall the year he earned $300K? What was his cash investment? How many times did he turn it? So I think she's interested in doing something similar.
Yeah. So what the doctor ended up doing is that before the pandemic hit, there was a program that we had available, and it was essentially we would take, let's say, if you had $100,000, you would get pre-approved for $1 million line of credit. And the way that worked is you basically had to put down 10%. And it's not quite exactly right, but from just a simplistic way of explaining it. So we pre-approved him for like $3 or $4 million line of credit. And then what he did is he got 90% leverage, and then he went out and started marketing it. So in today's market, where we'd be with you, you'd be putting 20% down on each deal. And I've heard that we're going to get the 90% back, and it may come back, you know, pretty quick. But right now, so the way you would look at that is, you know, if you're doing so the average deal that we funded over the last 5 years was about 200 grand. So if you're putting 20% down, that's 40K. So you need that 40K as a down payment, and then you need 6 months reserves. So that's 6 months reserves on 200 grand. So 1% of 200,000 is 2K, times 6 is 12. So you need you need $52,000 to put down to do that deal. And so what you would do is you would simply, when we're working with you to analyze that deal, we would make sure it had at least 40,000 and maybe more of projected profit. And then we'd just help you with the JV documents to say that you get the first, you know, 20 to 25,000. And I'm happy to spend time, you know, with the PowerPoint or whatever later, if that would be a help to, you know, others.
Absolutely. We'd love to have you back. That was some incredible content. A couple other questions that are coming in. So Jen is asking, you talked about funding fix and flips in rural areas. Do you also consider rural areas on buy and hold investments?
Yeah, but what I'm going to tell you is that what you're looking at is long-term higher rates to do that, just because it's higher risk. And so what that capital is it's private money that is in the form of what's called a family office. It's just wealthy individuals that have capital that they want to put it to work. And so they're doing that. And Dan knows for years, we would tell everybody the number one way your deal's going to get declined is rural. The lenders just hate rural, the institutional, lenders that sell it on Wall Street, they hate rural. But I have to tell you, I've made a lot of money in rural areas. So I went out and worked hard to get a rural solution. So it's not going to be, if you get funding at a bank, I tell everybody, go to the bank first if you can get it. If you can't get the bank, then try some of the institutional money. See if you can get it. If you can't get institutional money, and so the definition of rural is within 30 minutes to a city that has typically about 30,000 people. So 30 minutes to a city with 30,000 people or more. If it doesn't meet that, then it's rural. And other places have different guidelines, but that's a good rule of thumb. And but you might end up with a rate that's 10%. And so you have to analyze the deal and decide, does it cash flow? If it cash flows, and you don't have any competition, you could potentially do a lot of deals in your market that others just can't get the funding for.
Hey, Scott, just for clarity for some of the students, what would you specify as institutional money? You first said the regular banks, and you said institutional, and so on.
Yeah, so what you're going to do is that if you go out and you Google hard money, you're going to have like 15 different places pop up. And I call it fake out funding. And you're like, what do you mean? Well, what happens is they say, yes, 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 until you need them to come through. And so what institutional money is that what they're doing is they're packaging up your loan and they're selling it to Wall Street on the secondary market. And so when COVID hit in March, my best correspondent lending relationships froze, meaning we went from business as usual, and then the next day, nope, we're not taking any business, none. And I was like, why not? And they're like, well, we sell everything on the secondary market. We don't know if the real estate market's going to collapse. And so I immediately said, you know what? I'm staying true to the name of our company. I'm going to focus only on private money sources that have nothing to do with a tweet or a plague or somebody says something and the market drops. I want to stay as far away from that stuff as I can. So, so let me tell you who's a good candidate for institutional money, just so that, because it's not all bad. They do a lot of good in the industry, but you got to fit their box. The box you must fit, you got to have a 680 credit score or higher. Ideally, you've done a deal or two. Ideally, you have more, you've got 100,000 or two in an IRA, 401k, stocks, bonds, mutual funds, that you can show them that, this is not all the money you have that you're trying to put in the deal. If you fit that box, you will fit institutional money, and they'll be happy to have you, and they'll treat you really well. But somebody that's on the bubble, or somebody that's, so let me give you an example. So Dan, you know that in the past, we've had people get things like corporate credit, not us, but they would come to us and say, hey, I've got corporate credit and I got approved for $100,000. And for those of you that don't understand this is credit cards and other lines of credit that they get. Well, they get this and their 700 score goes to 500. I mean, it's just the way it is. I mean, if you leverage all of your credit cards, your score is gonna drop because it's based on utilization. Well, so there's this seesaw. You got a 700 score, but you don't have any money. So now you got money, but you don't have any credit. Well, the institutional lenders hate that stuff and won't work with you. So what we do is that if you can find a way to go get the capital and it takes your score down, then you've got enough money to get in the game and start doing deals. We will use private money sources that's not credit related. It's asset-based lending. It's looking at the deal, making sure the comps fit, and it's fast, meaning it's a BPO. It's 24 to 48 hours on that. And as long as the title is not backed up and we can get the title in a similar amount of time, we can close the deal. I know that's a long answer, but I really want to try to add value and not, really denigrate the Wall Street money. It has its place. The problem is at least half the people at any given time don't have a 680 score. So they're dead.
Okay, thank you so much. I think that really gives clarity. I mean, if you have great credit, you've got money sitting around, you like you said, check all the boxes with the big boy banks. That's wonderful. But most people don't have everything perfect. And so that's when you got to look at other sources. So thank you so much.
Yeah.
Scott, looks like we have one last question on the list here. So Charlotte asked, you spoke about lines. Do you lend on assets as long as they have cash to cover the 6 months? Do you lend on commercial property? Obviously referring to the lines of credit versus the loans.
Okay, so a lot of people, when you say to somebody, do you want me to tell you the truth or what you want to hear? And if you speak the truth to people, they tend to get offended because it's like, well, I'd rather let you get offended and tell you the truth than have you misunderstand something and it cause hardship to your family. Lines of credit was a come on in the industry when the market was raging before the pandemic. And so what they would call it is they'd say, we'll give you a line of credit. It's not a line of credit. We ended up calling it a RELOC, a real estate line of credit. And basically, I think that's a poor choice of words because people, when you say line of credit, people think of a home equity line of credit or like a credit card that you have a credit line on, and you can use it and pay it down and use it again. That's not how this works. It's you put the money down, it's locked in that deal until that deal's done. When that deal's done, your investment plus your profit comes back to you. And so the whole word line of credit is misleading in our industry.
So it's more like a loan with a draw structure.
Well, I guess a draw structure in the sense of I'd rather call it a rehab reimbursement because that's really what's occurring. There's no draw that's occurring. And if I told you you're going to get a draw and you're expecting it and you got your life planned around it, now you're upset. So,
right. So rehab reimbursement, just for clarity, we start the project, we get maybe a third of the way through it. We've put $15,000-$20,000 into a project, and I come back to you with receipts and say, hey, can I get a reimbursement and just kind of clear up some of these lines or get some cash back into the bank to do the second phase?
Absolutely. Now, if you go in with that mindset, you're not going to feel misled, and we're going to have a great relationship because you understand what's happening. But too many people would call us and said, you told me I had a line of credit. I need to use it. I'm like,
where's my money, Scott?
Yeah.
Yeah. No, that's good clarification. I'm going to open it up to one last question. So anybody that wants to ask a question, you are free to come off mute, ask Scott your question directly, and then we'll wish him a happy evening for the night.
All right.
Anybody got one last question? I have one last question, Scott. What are the chances of getting you back on this call maybe sometime in the future?
I'd say anytime it helps you guys, it helps me because we're both growing our businesses and, you know, and if we can add value, we'd love to do it. I'd say pick a topic and I'd be happy to drill down and, you know, spend 20 minutes explaining an area and then answer whatever I can. But yeah, more than happy to support you guys as you grow, all of you, as you grow your business. I mean, having access to capital and getting, you know, the truth about it is a big deal. And I would just close, Mitch, with just simply saying to people is, you get stuck in a situation. I mean, I get it. I have to earn your trust in your business over time, and it's a process. It's a relationship, and I don't expect you to stop what you're doing. Just if you get caught in a situation, call me up, and I'll do everything I can to help you work through that and see if we can earn your business.
Absolutely. So Scott's contact information is still on the screen. So if you haven't written it down yet, make sure you write it down, because the kind of service that he's offering is it's super valuable in the business, right? We've talked about how important capital is to start moving forward, and Scott's your guy. So Scott, thank you so much. We're getting people just blowing up the chat feed here, thanking you for your time and your knowledge. We really appreciate it. So thanks for being on the call tonight.
Yeah, my pleasure.
Guys, as always, it's been a pleasure hanging out with you guys tonight. We have our Ask Mitch Anything call next Tuesday, same time, same place. So until then, stay safe, stay healthy. I love you all, and we'll see you then. Talk to you later.
Bye. Thanks, Scott.